1 second there. I was on mute. Didn't even know I was on mute. I think I got it all together now. I think, yep, there we go. We're good. So once again, ladies and gentlemen, boys and girls, and children of all ages, today's episode, we're going to be talking about that 2018 mistake, that 2008 mistake replaying in 2020. We're going to talk about exactly what does that mean, how does that tie to everything, and how does that make sense for everybody else. So for prime example, if you haven't done so already, go ahead and make sure you hit that like, subscribe, comment, and share button.
Hit the subscribe button. Hit the bell icon. Hit that like, comment, and share button.
Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show. As always, it's your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live, all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we are going to jump straight into it. So the first thing we're going to do, we're going to talk about this green energy hit that we took today. One, we got green energy. We're going to talk about Bitcoin and FinTech, the FinTech behind it hitting the all-time high. What happened to Tesla and Apple stock on the decline? Are they kind of being dead? What's happening? What's going on with them? The low interest rates in the market. We got to remember about those low interest rates. We're going to do a stock review of the WLMTF stock review. And we're also going to look into the two type of wealthy people that everybody follows. So the first thing I want to get into, what am I talking about? What I mean by the 2008 mistake replaying in 2020. The first thing I want to talk about is when people talk about the mistakes that they have in life. Myself, in 2008, we saw the market crash. At the time the market crashed, my chair's making all this noise, rubbing up on this desk. Calm down. Thank goodness. Maybe I need to stop moving. There we go. But so anyway, for the long story short, back in 2008 when the market crashed, I had no idea what that meant, right? I was kind of relatively new, interested in the world of investing, but I didn't understand it completely. By me not understanding it completely, I made some decisions that was not so smart at that time. So with that being said, people look, I pay attention to, let's go back. Let's back it up a little bit. I want to make sure I flow with this properly. Knowing, like I said, a wise man learns from his mistakes. A smart man learns from his mistakes. A wise man learns from the mistakes of others. So in 2008, when the market seemed like the world was coming to an end, we were in wars in Iraq, we were in wars in Afghanistan, and people starting to decline. All markets are declining across the globe. What I started to do at that time was I was questioning what was next. I'm like, man, is the world coming to an end? What's going on? Whatever the case may be. Now in 2008. Once we went into this, we had all type of stimulus, much things that we saw happen last year and happening this year. We saw all type of stimulus, all type of legislation. We had a housing market bubble that burst. People lost their houses. Government was doing all type of things to keep people in their houses. All that great stuff like that. 2009 started to come around. And you know what? I'm going to play this out because I want you guys and girls to see this on a map. So 2009 came around. We're kind of breaking out of it. 2010 came around. Then we had another quick flash. It flashed back down. Then it came back up. So we didn't know. So at this whole time, I'm saying the story was, let's pull up on this chart too so y'all can see this as well. I'm gonna pull this chart back up. Let's go back to the max, and we're gonna stretch this out. So let me share the screen real quick. So when y'all see me talk about this market crash in 2008. The mistake I made back then and how I can see it on replay now. So, all right. So this was 2008. You see my mouse walking across. Hopefully y'all can see my screen. There it is. Y'all see it. So right here, we're going to walk across what happened. Okay, boom. Here we go in 2006, 2007. I'm interested in the world of investing. I got some extra money going on. I think I'm in Iraq at the time. No, I didn't get Iraq until 2008. So here we go. The market is declining. Every day I'm waking up, the market is declining. All I'm saying, I started to buy some mutual funds right around this time frame. We're looking at the S&P 500. Here we go, September 2008. As the market is declining, I sat back and I said, hey, let me buy some mutual funds. Mutual funds start to decline. And at this time, the sentiment in the market was like the world was coming to an end. We was in Afghanistan. We was in Iraq. We were General Motors shut down. Ford was shutting down. Bank of America was shutting down. We had all these things that just started to collapse. I mean, the whole economical collapse was going on around the world. And here I am. I think I was with like 23, 24 at that time. And I was thinking, man, the world is coming to an end. You know, we never seen this before. This is the biggest market crash ever, the fastest market crash. I saw all the headlines. I thought the world was coming to an end. Now, in 2009, when we started to come out of this, I didn't believe the market. 2009, 2010, I had PTSD. And a lot of investors face that. I still face it to this day. I had PTSD of what I saw in 2008. So in 2011, as you can see where I'm at now, you can see we're coming out of this down market, but I can't see this because I'm so close. I'm so zoomed in. I'm seeing the day-to-day interactions. You know, at this time, they're pumping out stimulus packages. They're helping people get home. President Bush is out. President Obama comes in. He has the Obama, the housing act that he had. He had a housing thing that he wanted. He wrote stimulus checks. Obama wrote stimulus checks. Bush wrote stimulus checks. We had all type of budget cuts. We bailed out this person, bailed out that person. All these big stimuluses was going on. And I'm thinking, man, the world is coming to an end. You know, it wasn't until around about 2012, 2013 that I'm like, oh, you know what? It seems like we're coming back. So you can see from 2009 to 2013, I missed the bull market. When you go from 2009, 2013, when we look back, of course, the rearview mirror is always clear. I missed the bull market for 4 years. Now 2013, I'm like, well, things seem to be on the up and up. But even in 2013 and even in 2014, I still have remnants of 2008. What happened? So I'm anticipating another market crash. Here we go into 2014. We're going to 2015. We're going to 2016. We're going to 20. Now this is when President Trump comes along. Trump is in office now, 2016. I'm like, oh, we had a nice little dip come. I said, oh, okay, here's that market crash I've been worried about that I think is going to happen. The market took a little dip, then it took off. Bull, 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 bull. We had another dip there in 2018. I said, oh, that's the market crash. And guess what? It took off right back up, 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 up. And then we had the COVID come through last year. We've seen this major drop. So this whole time, ladies and gentlemen, I'm doing this to say from 2019 all the way until 2020, that's an 11-year bull market. If I was aggressive, had I didn't know we was in a bull market, I couldn't see it. I was so close. And I told you about some of the events that were going on and some of my sentiment that was going on as well. Now, when I look back, I was like, wow, 2008 was the perfect time for me to start investing. It was when everything crashed. Just when all the stimulus packages was coming out. It was when the economy was everybody was, unemployment was high. Bailouts was all over the place. And there I was trying to figure out, hey, how am I going to be able to, I'm trying to figure out, I can't even realize that we're in a bull market. I can't see it. I'm too close. So Prince, okay, what does that mean? You just showed us a graph from 2008 all the way to 2020. What do you mean? We just saw a major crash happen, the fastest stock market crash we ever saw happen last year in March. And from March until 2023, we could be on a bull run. The 28 mistake, what was my 28 mistake? From 2008, I'm talking about 28. 2008 mistake was from 2008 to 2020, we were in a bull market for 11 years. Why did I not take full advantage of the bull market for 11 years? Because I never believed it. I was so close, I couldn't see it. I saw this dip of 2008, and I was just waiting on the next big dip. Every time I saw 2010, we had a flash crash. I was like, oh, there it is. Then we kind of bounced back. President Trump got elected 2016. Oh, there it is. We bounced back. 2018, we saw a little weakness. Oh, there it is. Then we kind of bounced back. Then we all know what happened in last year. 2020 happened, and it was like, okay, a black swan event came in, a virus came over from overseas and kind of shut everything down, and we've kind of been in the fuzz ever since. Ladies and gentlemen, I'm saying all of this to say, back in my 2008 mistake I made, I didn't ride the bull because I didn't know there was a bull. I couldn't see it. So what I mean by this in 2020 In 2020, as everybody look at 2020, we saw that big flash market crash. This could be the start of a new bull market. It's what I'm telling everybody. A lot of people don't believe me. A lot of people say, well, Prince, you're crazy or whatever. That's what I say my 2008 mistake. Is it on replay in 2020? Are we in the start of another bull market and nobody's realizing it? Why? Because every time you turn the news, everybody's talking about we're in a fiat currency. There's a new stimulus package. The dollar is getting weaker. The president don't know what he's doing. Those are the same. Everything, the sentiment I have right now was the exact sentiment I had in 2008. I just didn't jump on the bull. I was so smart. I was trying to figure out when is going to be the good time. When is the next major crash? How am I going to time the next crash? Instead of jumping on the bull, putting on my hat, I never rode a bull before, but I've seen a couple people do it. But all my cowboys out there, let me know, if I'm doing it right or wrong. Instead of riding the bull, I didn't ride the bull because I was waiting on the bear. I put a little bit in. I put a little bit here. All that investing that I did in 2011. What if I just would have threw everything I had into something simple, the S&P 500 index, brought it on a consistent basis? Where would I be today? Versus, well, I don't want to pull out my money there because I think it's going to crash again. I don't want to put all my money there. I think this is going to happen. I don't want to put my money there. Don't put all you assets anyway, but I didn't believe in it. I just saw the market crash. I just saw chaos and I waited on the next turn. But instead of waiting on the next turn, why aren't you investing? And I feel like that's what people did in 2020. So a lot of people in 2020, when we saw that big joke happen in the market, a lot of people took off running. They took their money out, they moved the cash, and they've been waiting ever since. I tell the story all the time. I have buddies of mine that's been waiting for the last 6 years for a bear market so they could come into the market. So they have missed 6 years of growth. Last year, the S&P 500 did 18%. Just a simple S&P 500 did 18% in 2020. 2019, I don't know the statistics on it. I don't have the exact numbers, but I know 2018 was down. 2019 was positive too. But look how many times people missed out. So I ask you and I challenge you as an investor, as you're tuning in today, as you're watching this, or if you're catching the playback, what if 2020 was the start of a new bull market? In 2008, I thought it was the end of the world. In 2020, people think it's the end of the world. People said the government is printing too much money. Same thing they said in 2008. Gold took off and ran. Same thing that happened in 2008, except now we have cryptocurrency. We got Bitcoin taking off, which we're going to talk about next. So the sentiment that I see, everybody was waiting on the next crash. Nobody rode the bull because everybody was waiting on the next crash. Same thing in 2008. I was waiting on the next crash. I was sitting in cash. I put a little money here, there. But I didn't know the cycles of the market. What if this is the next bull? Or you take my mistake I made in 2008 and see if it's repeating itself in 2020. Ladies and gentlemen, that was the topic for today. Now we're going to get into some of our subtopics. We're going to talk about green energy taking a hit today. We're going to talk about cryptocurrency and FinTech hitting its all-time high. Tesla and Apple just went to sleep. Low interest rates in the market. I'm going to go into that one now. And then we're going to do a stock review and the 2 type of wealthy people you follow. Now let's get into it. Before I get into it, let me see what y'all say in the comments. If you are catching this live, say hello or whatever what we need to be saying. Everybody to say hello. Holder Global says good night. I don't know what you mean by good night, but maybe wherever you are, it is nighttime over here in Colorado. I'm trying to buy everything. Okay, Raw. I'm trying to buy everything. I want to get rich like everyone else got rich after the last market crash. That's smart. Right? Dunk, what's going on? He says, what's going on, my brother? What's going on, Dunk? Joseph Vittori, what's going on, Joe? He says, what do you mean by taking advantage? Specific stocks or higher overall investing a wide spectrum, i.e. S&P 500 index fund? Okay, so in general, I'm speaking of something like the S&P 500. That's just the most general thing that I could have looked at that time, S&P 500. Look at You got to think about it. When the S&P 500, Joe, when they decline, they're so big they take everyone with them. So anything at that time, back in 2008, I could have went with Nike. I could have went with Southwest Airlines. I could have gone with household names, large cap companies. I could have chose individual large cap companies that had opportunities back then. I didn't ride the wave. Or the simplest way, the most simple way is up top. The most simple conservative way is an index fund, which you know is a wide index that covers a bunch of markets, right? A bunch of stocks. Then below that, you have your individual stocks. Things I could have rolled into, I could have rolled easily into real estate. But in real estate, what was in the back of my mind in real estate? I'm thinking of the next market crash. When the real estate bubble is going to pop. It's a bubble. It's a bubble. It's a bubble. So I'm so anticipating the bubble. I'm so cautious instead of riding a wave that became into real estate. So you say you're taking advantage, specific stocks or higher percentage overall, invest in wide spectrum funds. Yes, you could have done funds overall, or there was plenty of individual companies. Look at Bank of America. Bank of America filed bankruptcy. Where is it at today? General Motors filed bankruptcy. Where is it at today? Ford filed for bankruptcy back then. Where is it at today? All those companies that was in dismay, I could have taken advantage of at that time. Individual companies. Then I could have taken advantage of the index in general. You don't have to be a rocket science to go out there and buy a NASDAQ, QQQ, ETF, S&P 500, which is SPY. That's what, those are things you could be doing. So I challenge everybody, didn't ask everybody, because in 2008, nobody was saying, look at these stocks, they're very low. People thought everything was overvalued. Everybody, oh, this is too high. The market is just way too high or whatever. I'm going to get into this, Joe, to make you think about it. Why do you think the market is so high? What happened in March of last year? What monetary policy was passed? I give you a good hint. What monetary policy was passed in March of last year by the Fed chair? Jerome Powell. Jerome Powell, what did he do when the market started to crash? That's a big reason. So let's go here. LK Ross says, I always have to ask, are we live? And you are buying and holding everything you can, every stock you can get your hands on. Yes, we are live right now, LK Raw. I know some shows come out, they broadcast live. I usually do those with my the show that I shoot in Hawaii. But yes, I am live right now. And no, I'm not. That's what I said, my 2008 mistake on repeat. Because I do have a substantial amount of cash, right? I won't say a substantial amount. I got a little bit of cash. I'm all right. So I got a little bit of cash, but I'm not going all the way in. Why am I not going all the way in? I'm gun shy. I have PTSD, right? I know what happened back in 2008. Will it happen again? Why am I not just riding the bull, LK Raw? Why am I just not just riding the bull? And that's why what made me bring to this topic, what if I'm missing out on the next bull market? In April, May, June, July of last year, the summer, the wintertime, just thinking about it. I mean, S&P 500 by itself, even with the largest crash, the fastest crash in history, we still got 18%. Would have started in April. I did ride some, but I didn't go all the way in. Right? Why didn't I go all the way in? I was gun shy. He said, forget the bear, buy everything. It would take a very long time for the bear to catch the bull. The bull is starting to get some momentum. I'm always a bear. I'm not a bear. I'm always a bull. It doesn't pay to be the bear in the long run. Everybody knows this. Peace to the people. What's going on, Gary Wallace? Dollar cost averaging. Very smart. What's going on, Al? He says, what's up, the Prince of Investing? And he said, I never buy at all-time highs. That's a good thing, but people were saying that last year too. How do we know? So here we go. Let's go back to that monetary policy that I asked everybody. I didn't see anybody in the comments talk about it, but here it is. Low interest rates and the market. Low interest rates. Jerome Powell, if everybody remember, what is the Fed fund interest rate right now? And what does the interest rate have to do with the stock market? Jerome Powell is doing the same thing. I can see the guy's face right now, but I can't think of the Secretary of Treasury in the Fed chair back in 2008. The Fed chair did the same exact thing in 2008 that they're doing now, lowering interest rates. Why does that have any bearing on the market? So the monetary policies that was passed back in 2008 and 2010, guess what? Notice this. You've seen all these talks of unemployment, but you haven't seen any talks of foreclosures. You should see foreclosures all over the country right now. You should see people kicked out of their apartments. People should be on the streets, whatever. But instead, the housing market is going up. What does interest rates have to do with the stock market? Jerome Powell, last March, cut interest rates to an all-time low. All-time low. And this is the same exact thing they did in 2008. When they cut those interest rates, they continue to cut those interest rates. Then Jane Yellen came in and she started to slowly rise the interest rates up. Jane Yellen in 2000, under the Obama administration, she was the Fed chair before Jerome Powell. She was the Fed chair. She started to slowly bring back the interest rates as the economy was starting to rebound. When she started to bring up those interest rates, of course, we had COVID come through. Jerome Powell took over, who was up under President Trump. He lowered interest rates to the lowest we've ever seen. Now, Jane Yellen, who was the Fed chair back then, she is now the Secretary of Treasury, right? So when you look at this, people are wondering, Prince, what's going on? What's going to happen? There you go, Gary Wallace. It injects capital into the market. Ladies and gentlemen, Gary Wallace is a very smart man. When they lower interest rates, these monetary policies that I saw in 2008, back then, I couldn't comprehend. I didn't know what it really meant. I didn't know what a Fed chair was. I just know it was a bunch of old, powerful people up in Washington making decisions who probably had trillions of dollars, right? But now I understand that when the federal government was cutting interest rates and the federal government was stimulating the economy, that was my opportunity to move into the market. I didn't understand back then. I was like, well, I don't know. I don't want to lose my money. I saw the stories of people losing their money, losing everything. So now I walk back into 2000, now coming to 2020, I'm seeing the same replay. I'm seeing extremely low interest rates, and I'm seeing an all-time high stock market. Jerome Powell, how do we know with the monetary policies that we had last year that we're not in 2020, that we're not in the start of a new bull market? Right now, everybody is anticipating another crash. That is the same syndrome I had in 2010, 2009, 2010. I was waiting for the floor to fall out when I should have been riding the bull. Now I asked myself in 2020, and I asked you to ask yourself in 2020, are you riding the bull at its full potential? Are you? If you're not, why not? So interest rates. So Gary Wallace says cheap money. So what happens with interest rates, when you have very low interest rates in the economy, it forces people into the market. For prime example, a savings account is not keeping up with inflation. Majority of CDs aren't keeping up with inflation. Where can I put my money today to match or beat inflation? It's only three places: real estate, stocks, business. That's it. Real estate, stocks, business. More people are flocking into the market because they can't make money anywhere else. On top of that, we have the biggest increase of accessibility to the market than we've ever had. What do you mean by accessibility? Back then in 2008 or 20, 40 years ago, you had to have a broker, get on the phone with a broker. You had to do all this stuff, all that fancy stuff. Now, today, anybody with a phone. I unplugged myself there for a second. Let me see if my microphone is back on. There we go. We're back at it. So now we're looking at today, anybody with a phone, anybody with one of these can what? Jump into the market now, right? So when we're looking at this, you have to ask yourself today, We have a lot of accessibility to the market, meaning everybody's sitting at home with Robinhood, E-Trade, people on Twitter, Reddit done came about. People are buying stocks more than they ever have. We have a very low interest rate where the government has just pumped money back into the market. People can't make money anywhere else. The only place you see people making money, stocks, real estate, and business. And I tie cryptocurrency right next to stocks, even though it's not. I know that. I don't hear all the Bitcoin tribe jump in my comments. What do you mean? It's totally different, but it has the same, like business is business, real estate is real estate, stocks and cryptocurrency. Yes, they are different, but guess what? Majority, you can get on Robinhood today, and the same act that it takes you to buy Starbucks stock, you can buy a coin, right? So when we look at this concept, this is what makes me think very low interest rates. Interest rates are at an all-time low. The Fed chair, which you should know, Jerome Powell, I think it's still Jerome Powell. I don't think he left with, maybe he did leave with Trump. But Jerome Powell, no, you know what? The Fed chair is in their own world. So the Fed chair, they lowered interest rates last year to the all-time low that we've ever seen, pushing people into the market because they have to. If you got a 5-year CD, you are losing to inflation. You got a savings account, you're losing to inflation. Bonds, losing to inflation. Where else can I put money? Real estate, stocks, you can say cryptos, and business. That's it. You have this big injection of capital to whatever you want to do. Here I am trying to double my money. I'm trying to see what's going on. I have to go to the market. Right? So now when you see all these things, these very low interest rates, people are now, you tell people to save and budget, that's out of the window. What do you mean? Okay, I'm budgeting, I'm saving, but I'm still losing because guess what? I'm not even keeping up with inflation. So all these people are now turning towards investing. This is the exact thing that the Fed chair wanted to do. All right. So now the next thing we're going to get into, the green energy hit. Well, I first saw some talk today. We all know we saw some talks of green energy being hit today we had snowstorms throughout the country or across the West Coast. And a lot of people said throughout the countries and across the West Coast that these green energy companies just turned into, what did these green energy companies do? These green energy companies, they proved they didn't hold their weight in salt when we had the snowstorm. I saw one senator, I can't remember his name. He said, hey, down here in Texas, I think it was Senator Cruz. I'm not going to say what politician. I'm not going to speculate. But a certain senator on Fox Business, he said, hey, these wind turbulence froze. All this green energy, this wind turbulence froze. So we got to understand now everybody's saying, hey, is wind turbulence, is it good as we thought it was? So now let's take a hit. Let's take a look at green energy. Let's see what President Biden has to say about green energy. Prince, why are you so big? Why are you riding with green energy? Here it is, ladies and gentlemen. I've already done shows backing this up with the Bureau of Labor Statistics. But here it is on JoeBiden.com. Of course, just because the president said it doesn't mean he's going to do it. But everything he has, infrastructure, auto industry, transit, power sector, buildings, housing, innovation, agriculture, environmental justice. When you read all of these, he's talking about he's talking about green energy. Here it is. Power sector, the most what they want to do. Okay, generate clean energy, American-made electricity to achieve a carbon pollution-free sector by 2035. He wants to be a carbon-free sector by 2025. Green energy, that's what he's saying in the power sector. Let's look at the auto industry. Create 1 million new jobs. Here we go right here. This is on JoeBiden.com. Create 1 million new jobs in the American auto industry, domestic auto supply chains, and auto infrastructure from parts and electronic vehicle charging stations, posing American auto workers and manufacturers, right? So right here it is again. He's talking about green energy. So right now, this is the president, the infrastructure. He wants to create millions of good union jobs, rebuilding Americans' crumbling infrastructure from roads to buildings to green space, water systems. So right here, everything almost has green, 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 green. So when I see the president, all he talks about is green, 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 green energy, green energy. It doesn't take a rocket science to say, you're looking at nuclear power, you're looking at hydrogen and solar, wind turbulence. These things are being built. This is why I like to make an investment into that area. But today it took a hit when the storms hit. People said, well, look at the storms. Gas prices went up because of the storm. Why did gas prices go up? Because it proved that green energy is a failure. Look at those wind turbulences. They got frozen. Some wind turbulence will probably be, I don't know, in the future, a hurricane will probably knock down a wind turbulence or whatever. But this proves that green energy is not up to speed or whatever. And green energy supposedly takes a hit. I don't buy into it. I'll tell you why I don't buy into it. Because it's like any piece of technology, we will figure it out and we'll come around. We'll work our way around it. Maybe we'll start having heated wind turbulent technicians. Maybe when we get a forecast of snow coming, maybe we have heated wind turbulent technicians. Maybe instead of the wind turbulent technicians being on the side of the highway, having these big wind farms that turn, we could come up with something that a way that it stores it and puts it somewhere else. But I think the ingenuity of humans, we will get past this initial shock of green energy. Okay, let's see what y'all say in the comments. The next step I'm going to do, we're going to talk about, you know what? We're going to get into Bitcoin and FinTech. Bitcoin and the FinTech behind it hitting all-time high. Everybody know what Bitcoin and cryptocurrency is, but people do people understand the FinTech, the financial technology behind the cryptocurrencies? What is the magic hand that is moving these stocks? Y'all don't forget to like, subscribe, comment, share, but let me see what y'all say in the comments. He said crypto. Yeah, crypto could be considered a new sector. It's forming up. Hey, how you doing there, Miss Crystal? She says truth. How you doing? LK Raw. This is the first generation clean energy. I'm sure second, third, fourth generation clean energy technology will be so much better. Coal and similar type energy will have a secondary option at best. I'm right there with you 110%. When people look at one time a solar panel flew off a house. Everybody, look, I told you solar panels wouldn't work. Solar panels are going to get to a time where they're going to become shingles on a house. They're going to become shingles. What's going on, Joe? Joe says Texas was isolated because they weren't part of the national grid. Therefore, they couldn't draw load share from the east and west grid. Texas power grid is private, shut down because of the increased load. That's what they get for being. I love Texas. Shout out to everybody in Texas. If you're from Texas live today, say hello. Don't get mad. I should have my investor show cup somewhere around here. But Texas senator came out saying, oh, look at this. It doesn't work. And I agree. Because right now, Joe, the green energy that we have, and the two companies that I go with on green energy, I've said it a million times, ICLN, the Renewable Energy ETF, and Enphase. I had Enphase before it became part of the S&P 500. So overall, green energy has done well for me last year and some of this year. As of lately, it's kind of lost some momentum. It hasn't been moving around like it used to. But who's to say? But I know that President Biden is pushing for it. And I think two things are going to happen. I think green energy is going to become, I tell people this all the time, Joe, if you're listening. Green energy is going to be a big thing. Cybersecurity is going to be a big thing. I definitely know you know that, Joe. Cybersecurity is going to be a big thing. Green energy is going to be a big thing. Marijuana, I think within the next year or two, cannabis, some form of cannabis will be legalized. I think the Democrats will push some form of, the Democrats control the House, the Senate, and the presidency. I said it a million times. I think we're going to make some type of move on a national level in cannabis. And if the government, I don't think it'll be like an overnight, marijuana is decentralized or whatever. I think a little bit of that is going to a little bit of that is going to open up the cannabis industry majorly. So I think that cannabis is going to have a nice year. I think cryptocurrency is starting off strong. We're going to see where it ends. As I see bigger people getting into it and it forms up into something, I can see it having a good year. The cryptocurrency, the FinTech, I think blockchain and cryptocurrency is going to have a good year. Marijuana is going to have a good year. Cybersecurity is going to have a good year. And clean energy, I think, are going to have a good year as well. Those are my ways I'm going to go. Hey, how you doing, Miss Ruby? Out of Memphis, Tennessee, right? Miss Ruby, you know what? You're going to be perfect into this next topic of Tesla and Apple. Did they just fall off the face of the earth? What happened to Tesla and Apple? Everybody got real quiet. Clarence M says news. What's going on? He said speculation. Okay. He said, Joe says, yep, pure politics, 80% of Texas power grid. Okay. I think. Okay. I thought it was the same one. Yep, pure politics, 80% of Texas power grid is convenient, coal, gas, nuclear, etc. Less than 20% is green. Power has become created. The Texas infrastructure just couldn't handle it. Now, this is what's going to happen with Texas, right? Texas has been strongholding against moving into the green energy space, but it's slowly going to happen. You know, y'all going to get the southern state that's going to be slow and behind, but it's slowly going to happen. I think we're just going to make bigger strides into that space. That only makes sense. We'll still have, Joe, let's do it. I know I did this on another show, but we went by the Bureau of Labor Statistics. In the next 10 years, I did this on a previous show. The Bureau of Labor Statistics in the next 10 years, they are looking at nuclear power technician jobs to decrease by 20%. Actually, it's 19% on the Bureau of Labor Statistics. You can round up to say 20, be cool, but it really was 19%. In the next decade, they're looking at nuclear technician jobs to decrease by 20%. But you look at the number one fastest growing job, according to the Bureau of Labor Statistics, in the next decade is a wind turbine technician. You're watching nuclear power technician decline, which I thought was always going to be in demand, and you're watching a wind turbine technician increase. Number 2 was a nurse practitioner. Number 3 was who was the third person? A solar panel installer. So when you look at the first way you build a company is through people. You got to have people. People are your best asset. They're the biggest asset you have to any company. So when I'm looking at going forward, if my son comes to Dad, what's the best job? What job I want to go to? I'm going to tell him the number one job right now, be a wind turbine technician. I don't see too many people want to be a wind turbine technician. So that's how we have to look at it. All right. So that's the way we have to look at it. Now, the next thing I want to get into is Tesla and Apple stock decline. It hadn't been a decline. They've kind of been dead. These were the hottest stocks of 2020. Tesla and Apple. They both did a stock split. I think Tesla was about 2,000. Apple was about 500. They both split down. Apple went to 100. Tesla went to like $300-400 or something like that. Still done well. Tesla is now doubled since splitting. It's at $800 something. Apple done okay. It's at 135. So they both have inclined since the stock split. But now, as of late, it's been pretty quiet in the Tesla and Apple land. You know, I'm a holder of both stocks. They're somewhere in each one of my portfolios. But I'm kind of wondering. I've been watching them. You know, Apple had great earnings, came out at $100 billion in revenue and all of this stuff like that. But everybody's just quiet on Apple. I think that Tesla and Apple used to surprise people. I'm trying to put this into a metaphor. When Wall Street can't figure out, when they underestimate you, when they underestimate you, and you beat earnings, and when you beat earnings, you start to see these companies decline, incline, right? Now, when you see these particular companies of Tesla and Apple, you can see a lot of them starting to, now they're cooling off. Why? A lot of it is that they're meeting expectation. Apple's $1 trillion company. Elon Musk ran by Tesla. Everybody knows he's the richest man in the world now. He's holding that title. So this is what I start to see about people, right? So Tesla and Apple, they've been pretty quiet lately. Their value is still there. Tesla has the hot hand. Of course, they just did $1.5 billion. It was announced into Bitcoin. But as of lately, they've been pretty quiet. And I've been kind of shocked about how quiet they've been as of late, right? So that's the way I look at it. Now let's go into, you know what? All right. So this was by somebody DM me every once in a while. When somebody DM me, I go over a particular stock. The stock here is WLMTF. Y'all give me 1 second to pull this up. Y'all give me 1 second. I'm going to pull this stock up. We're going to do a stock review live. This is Mr. Briggs. He DM'd me this particular stock. And I told him on this episode I was going to do this. So here we go here. Let's see. Let's see. Let's go here. SEC. W. What was that? Make sure I got that stock somewhere right. I got it written down. What am I? WLMTF. I forgot. This is the company that I have to look up another way. It really won't. No. I'll give me 1 second. WLMTF. Let's go to their website. How you say this? Wooling Motors? It's a Hong Kong company established in 1992. Owned by General Motors, if I'm not mistaken. Let's go here. I'll look at investor relations. They pulled up Walmart. I don't want Walmart. Here we go here. All right, I'm trying to pull their website up. Where's their profile? I should have just kept it up because it was a little. There it is. It's a 30-cent stock. Let me share it for you guys. Video, screen share. All right. So here's the company, Wooling Motors Holdings. High performance with less energy. It's out of Hong Kong. It's $2.17 in their money. RMP. Can't think of the exact currency. They make engines. They make parts. They make vehicles. Now, one thing, they're out of Hong Kong and the largest buyer of cars. I don't know if you've ever been in Asian countries, but they have a lot of cars on the road. It's just cars all over the place. Cars be bumping into people. I got in a cab one time. Somebody bumped us and kept moving. The cab driver didn't care. The person that hit us just kept moving. It just, cars just all over the place. So one of their currencies equals 15 cents for the dollar. So China is the largest buyer of cars, right? Now, what I saw here, General Motors owns this particular company. This company is 30 cents right now. Let's see what this company is all about. Our business. Auto manufacturing. Wooling Motor Holdings is a publicly listed on the main board of Hong Kong Stock Exchange with the code 305. Wooling Motors is a limited principal engaging in manufacturing automobile components, engines, specialized in vehicles of China. Partnered with, I can't even say that company name, I'm not going to even try. Willie Moore is a reputable state-owned enterprise with the extensive industry experience. Our group corporate goal is to grasp the tremendous business opportunity that arises of the rapid automobile industry in PRC in China. Okay, so that's their telephone number. That's what they are. Pretty simple. They make cars, these little cars here that you see all over China, police cars. That's kind of funny looking police car. They make parts, things like that. All right, let's look at their finances. All right. The latest financial statement, if I'm reading this correctly, is August. Well, that don't make sense. It's September 8th. Okay. Thinking that's September 8th, and this is May 28th. Let's take a look at their half-year report, how they wrote it. It's kind of funny, weird than usual, right? Here we go. William Motors 2020. They put this out in September. This was their last report, their mid-report. So they're pretty much telling you who they are in their about section. You can't click on it. It's not very interactive. Then, of course, this company is based out of Hong Kong. So, so that's why they have their language at the bottom. So they're doing America, but it's traded on the U.S. market. That's why they have it. They got their board of directors, things like that. Let's go down here to their financial data. And I think, I saw somewhere General Motors said they, I think General Motors purchased them out or something like that. I read that somewhere. I think General Motors owns this particular company. Okay, let's scroll down. Let's get to their finances. Looking for their finances here. Usually on the financial report, I can click on, here we go, financial review. The group total revenue for 6 months equals, what's that, $5 billion wrong? Okay, so this is a decrease of, so they have a decrease of 7.1% compared to 2019. The decrease was mainly attributed to a substantial decrease in the revenue of group automobile components and the other industry servers caused by the outbreak of COVID. So they're saying due to COVID, that's why they had a 7% decrease. Earlier this year, where serious extent of its suspensions and disruption in our operation, the group resulted in, especially the first quarter. As a positive note, revenue from the engines and the related parts division indicated some improvement, and revenue from vehicles remained solid during the 6-month period. So essentially, they had a 7.1% decline last year, beginning of the year, and they're saying it was related to COVID-19. The gross profits for the period under review, was 249 million. I can't even say, what is the yen? 249 million yen. That's the currency. Am I crazy? Representing a significant decrease of 52%. So their gross profits fell by 52% last year as compared to the same period in 2019. The significant decrease in gross profits was primarily due to the material adverse impact from the outbreak of COVID-19, which resulted in the business volume of the group, and in particular automobile component, the health safety measures, blah, blah, blah. Gross profits tumbled to 4.4% as compared to 8.5% as recorded of last year. So they lost half of their gross profits over a year. So let's take what this stock looked like over a year ago. Let's see here. Where's the chart? Go to summary. Let's go 5 years just to be safe. Wow, the stock had just set. Come on, the stock ain't even moved. Am I reading this correct? Let me see if my Yahoo Finance is playing with me or something. Here we go here. All right. They're 28 cents now. If I go back on a year, man, come on. Okay. Okay, let's go back 5 years. It was 32 cents. December. What is the volume on this company? Let me see. The beta is high. Let me show y'all what I'm looking at too. Let me switch my screen over as well. Oh man, I thought y'all was looking at my other screen. Y'all give me 1 second. When I was looking at those finances, this is the finances I was looking at, y'all. I'm sorry about that. This thing had them switch screens and even show. Is this the right one? No, that's not it. That's why I made that mistake the last time. I thought this was showing you the company's finances as I was speaking. Nope, I don't want to show that one. I think it's this one right here. You got to be crapping. Is it the PDF? Oh, yeah, that's it. I should have had this down packed by now. Y'all give me 1 second. All right. So right here, gross profits dropped 52%. Y'all see that? You can see the Japanese or Chinese writing or Japanese writing or whatever it is. I can't read it. No disrespect to all the Asians that's tuned in or not tuned in, friends and things like that. I just don't know what that is. It's Asian writing. I think it's Chinese. I'm pretty sure Hong Kong and Chinese use the same writing. But anyway, this is a small company. It's a penny stock that costs 28 cents, 30 cents. With me looking at it financially, this is something I wouldn't be interested in. I'm not smart enough to know. It's no financial particulars of it. There are many cars. They lost 52% of their gross profits. What is the spark behind this? I will wait till it matures some more. I know some people in the comments are saying, hey, this is a company I want to jump into. To me, it's completely speculative. I don't like to have a bunch of companies sitting in my portfolio. Then the sad part about it is when they don't move. So look at this company here. It's only moving 0.22 now. Today it moved 0.009, almost a penny. The volume looks extremely low. The 52 range is at 28 to 30 cents. Now, this company will have to break out for me to invest in it. So, y'all answer my question. Will I invest into this company? So, no, I will not be investing into WLMTF, Corporate Finances. It's a penny stock company. Over its 52-week range is $28 to 28 cents to 30 cents. Not a lot of volume. It's kind of been sitting there for 4 or 5 years. When it breaks out of the 30 cent and go to 40 cent to 50 cent, then I may be looking into it or whatever. But right now, nowhere near on my radar. Nowhere near. We're in a booming economy, and Tesla's doing fine. They done fine for me. They done very fine for me over the year. General Motors is doing pretty good. Ford is. Why would I go get this unprofitable Chinese company or Hong Kong company right next to China that's losing money out the wazoo? That's 30 cents that barely even moves. I'll wait. I'll wait till you got to break out of $1, break out of 50 cents. Show me you're on the up and up. You have to take it's like, you know what? This is how I look at my portfolio. I have my starting 5 or starting 11. And when I got my starting 5 or my starting 11, and you want to come and you're looking for me to make a new investment, you got to beat somebody out that's already in my portfolio. I don't like to add on a whole bunch of stuff. I mean, somebody sent me a portfolio. I never forget it. It was like 300 positions. There's no way in the world possible you know what's going on in this portfolio. 300 positions? No way possible. In all those 300 positions, you line that up against the S&P 500, they still losing. So I like to keep my little 10 or 11 starting on offense. And in order for me to add you on, I don't add you on. You got to beat somebody out. You got to take somebody's position. You got to go in there and show me, Prince, why should I go get WLMTF, Willing Motors? I got to go get rid of my. Would you get rid of your energy stock, clean energy, renewable energy companies to get this? Would you get rid of your CrowdStrike or your hack, cybersecurity to get with this? Would you get rid of Tesla to roll with this? Would I get rid of my Southwest Airlines to get with this? I have space. That was miraculously done pretty well, but it has to be able to, in order for me to put a new company into my portfolio, it has to make a compelling argument of taking somebody else's spot. That's how I look at it. And I look at this new thing, and I look at what I got, and I look at who hasn't been performing, and I look at what you're doing, and I'm looking at this is because a chain is only strong as its weakest link. So I look at my weakest link, and I look at this new thing, and I look at, can this new thing beat my weakest link? If it can't, no. Right now, who's my weakest link in my portfolio? Plug. I got Plug kind of on it was a little high at the time. But if I'm looking at Plug, and I'm looking at this hydrogen energy, and I'm looking at WLMFT, no, I'm not going with that. Over the next 6 months or a year or whatever. All right. So my answer is no. Y'all got my answer. That's my little button. This was the greatest gift ever. This was brought by Andrew Slager. He brought me this, and I hit this button, and it's perfect in my office too. So I give it the button on that one. I got to give it the button. So no, I would not be getting that company. Why am I taking that risk? I don't want a bunch of penny stocks just laying around. I've done that before, and I'm just hoping one of them take off, and I'm just sitting there 2, 3, 4, 5 years. I don't miss out on the bull market messing around with some random penny stocks when everything else is just roaring and doing so well. All right. This is my last thing before I get out of here. The two type of wealthy people everyone follow. And what to be careful about it. The first type of wealthy person I've learned, and I'm pretty sure I look back over this and over the years, I probably get smart on it. The first type of wealthy person is the person who's a daredevil. That's how Elon Musk kind of comes off. Elon Musk is like the daredevil. He's like, yeah, you know what? How many billion I got sitting in cash? Yeah, get some cryptocurrencies. If it don't work out, I lose $1 billion, whatever. Yeah, we'll take Bitcoin. He's a daredevil. But he's a daredevil with only $1 billion to him. I don't even know what his net worth is now. It's a couple billion now. What difference does it make to him? It doesn't make a big difference to him. So the first type of person is a daredevil. They have $100 and they're taking $1 and they're playing scratch off with it, or $2 or $3 or whatever. And people follow the scratch off money. What I mean to him, he's looking at it saying, yeah, I'll play with that. Everybody's like, oh, that's a big deal. Some people, and Mark Cuban kind of falls into that too. Mark Cuban is that person who stays on the ground, who loves that excitement of getting something right, getting his hands dirty. Right? That's two. That's the one person. There's two people. The other type of person are wealthy people that I look at that everybody follows. Bill Gates. Look at Bill Gates. When the last big wild investment you really seen Bill Gates make? Then have a time when he make a big wild investment, he gets it with other people's money anyway. So these people, what they usually do, they are capital preservers. They're someone who's probably in their 60s or 70s by now, and they're not out there trying to make it anymore. They're trying to preserve what they already made. Type 1, daredevil. Type 2, preserve. And the person who's preserving their nest egg, they're way more cautious. They speak about the world's coming to an end and blah, 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 blah. The reason why they're so cautious is because they already got their nest egg and they're just trying to nurture it, right? But if you take that same type 2 person who's nurturing their egg and you was to rewind the clock back and they was 30 years old, they'll probably be all over the place. So something that I take when I read a lot of wealthy people, I follow a lot of them, I interviewed a lot of rich people, wealthy, whatever, right? Some of them are type 2, where they're preserving their wealth and they're looking around to make sure whatever's going on, and they might shave a little bit and get a little creative here or there, but they don't need to take that much risk. They already got they can just sit back and let the compound interest just make them stupid amounts of money, right? Can you know the compound interest on 10 billion, 30, 50 billion dollars? They're just making stupid amounts of money. They're preserving. Number 2, the first person, type 1, they already lived their life. They got enough money. They got the generations taken care of. They got 2-3 generations taken care of. Now they're just having a little fun. So you got the person who's very active out there moving around because they're trying to have a little fun. And then you have the other one who's kind of preserving, but they're very speculative of everything that's going on. Right? Those are the type of 2, and beware of those type of 2 people. When I listen to a lot of them, I can tell within the first 3 minutes what type of wealthy person they are. Capital preserving. You're young, trying to make your money, and you're following someone who's preserving their capital. See, they don't need to make all those wild moves. Why? Why don't I need to go put half my nest egg into cryptocurrency? I can just let compound interest make me tons of money. Why? Why don't you take that risk? They're not going to take that many risks anymore because compound interest can help them for the rest of their lives. Let me see what y'all say in the comments before I get out of here. He said, I don't like to follow any wealthy position as their rules do not apply to me. However, I will listen to any person that started from nothing and made millions. You're right. I love those stories. Anybody that started and came to something, I always love their stories. I don't care who they are, as long as they did it legal. No, nothing crazy. Jetta said he missed the show. What's going on, Jetta? You can catch the playback, or we'll be back. We'll be back to do it again. He said, I know people that made millions that no one would ever know who they are since they're not in the public. Yeah, plenty of them walking around. Silvergate is still bubbling. Yes. And Bitcoin is bubbling the most. Yes. Now, the other one that's out bubbling Silvergate is Riot. Riot is out bubbling Silvergate, but Riot is unprofitable. Silvergate is a profitable company. So, I don't know. But nobody cares about the company's fundamentals until stuff starts to go left. Nobody cares about what you're doing until, your wife don't care what you're doing in the basement, until the lights stop working, the heat doesn't cut on. Then they're going to be wondering, like, hey, how much money do you make? What are you doing? They're going to start digging into everything you got. So if Bitcoin cools off tomorrow, instead of the summertime, Bitcoin just flushes out and goes back down to $10,000 a coin. That's when, and I had to tie up Riot. Look at Riot. Riot is doing great as well. And I had to look at Silvergate. Silvergate has more fundamentally sound than Riot. You're right, Jetta. When you look at Riot, you got it at $8. Nice. Send me $5, man. You got $8. You bought it at $8. Nice at $50-something. So that's what, 300-400 times your percent. Great for them. But Riot is about 30-45 minutes away from my house in Castle Rock, Colorado. And I don't know why I keep saying that every time. Y'all be like, man, Prince, we heard you say this about 50 million times. But that's a company. It's unprofitable though. They're looking to be the FinTech. They're looking to be the FinTech behind Bitcoin. But the reason why I chose Silvergate is just more fundamental. That's the only reason why. It's just more fundamental. And they're going to make a crap ton of money. what's his name? Riot has made a lot of money off of people buying his stock. I know that. They're probably going to have a bang up earnings report, but it's probably they probably don't call too much tailwind as we speak. So, all right. Well, I got to get out of here and get running. I am definitely tired, tying down my day. I had to take, I think I went to 3 different Boys and Girls Club this afternoon after work to drop off Wesley Learns Book Club off to 3 different clubs. And I still have 2 more clubs to go. So the book club has formed into 5 different clubs, and we're going to make some new shareholders. So congratulations to those parents. I was excited to go all over Denver and drop off these books for these kids to start in book clubs, and 3, 4, 5 new book clubs, not book clubs, but Boys and Girls Club. So he said, I'm still waiting on my book by. You said, why isn't Riot not profitable? That's going to be another episode. We're going to look at their financials, and we'll show you how we know they're not profitable. He said, until next time, you got to the end of my work shift, 30 minutes to go. Okay, Raw, he's always in. But anyway, I hope y'all got something out of this episode. I'm going to chop this up. I'm out of here today. This is the one, a little long episode here where we talked about, let's do a quick little rundown. Let's go back over it, what we talked about today. We talked about the green energy hit. We talked about Bitcoin and the FinTech behind it hitting the all-time high, aka Riot and Silvergate and Bitcoin. You talk about Tesla and Apple stock start to decline. They kind of went on pause. Nobody's talking about them. I always tell you, in the bear market, people get real quiet. So people are real quiet on Tesla and Apple right now, and I think that they're just too successful. It's nothing they're doing hot new. Apple's $1 trillion company. It's nothing new and sexy about it. Like, look at Disney. Nobody's talking about Disney, but look how much Disney has done since COVID happened. We talked about that low interest rate in the market, and we also talked about that 20 hottest ties in the 2008. How do we know 2020 is not the start of the new bear market? I'm sorry, y'all, bull market. Y'all know I'm getting tired. The new 2020 could be the start of the new bull market that I missed out on in 2008. I got some of it, but I was so temptations and scared, and I was watching what everybody was saying. I was scared because I thought the bull was going to come back out. So anyway, ladies and gentlemen, strap up, ride that bull, stop playing. And we talked about how low interest rates tie into the market. We also did we looked at William Motors and looked there. We did a review of that. We pulled up the company, saw what the company was about, its headquarters, what was going on with the company or whatever. That was, every now and then I go through my DMs and I pick a company and I go over to the live show. And that was a no to me. And I talked about the 2 wealthy people that people follow to be cautious about. And you're right. I love people that went from zero to hero every time. All right. Patrick, what's up, Pat? He said, thanks for the talk, big dog. Anytime, Pat, anytime. But anyway, ladies and gentlemen, I enjoyed y'all as always. But until the next video, podcast, cartoon, or whatever y'all see me do around the globe, peace, be safe. I'm out. Thank you.